Powell began his Federal Reserve chairmanship in US dollars in real terms. It was back up here in 2018. It was right around the February timeframe. We think of that as being the VIX explosion of 2018, and it's where the VIX became very, very closely inverse to the indices. It essentially started looking like the ES. The ES used to be very, very choppy and had, a big day was 10 points, if you can believe it. It turned into a 100 point a day instrument, and the volatility began to trade more like a protection or a hedging type of instrument. But let's look at it in terms of the US dollar. What was and I'm inverting gold here. That's the real dollar, what it really buys. And you could buy an ounce of gold for right around $1,000 or $1,100 in 2018. And right now we're at about 45. And so let's just round down and say let's just say it's 11 to 44. So, there's been a 400, 4x increase in gold. Another way to think about that is the US dollar buys 4 times less in his tenure. And what's interesting is that, $4 trillion have been added to the Fed's balance sheet in that time. And it's the most of any single Federal Reserve chairman. And, it could be more under Warsh. It's going to have to be if they're going to keep this thing in the air. Keep it in the air. What I mean by that is, in airplane terms, you lose power and you have a dead stick, and they got to keep the liquidity flowing and keep the money machine or the money printer printing. Otherwise, you have a dead stick. You have an airplane that doesn't fly anymore. And this is the analogy that we were using back when we were doing our Fed Pivot webinar, where essentially Powell is and now Warsh is walking a tightrope between a hyperinflationary crash up and a deflationary bust. And that is always the game that is being played. That's always the game that is being played. Now, we have had an incredible rally over this last 45 days, and it has been, really 45 days since we hit these profit targets down below here. They were profit targets to a traditional short that we had been inside of from our highs of the year to lows of the year. This is what they looked like. And then we ripped off of this profit target, and we've been in a 1,200 point rally. It's actually, if we were looking at the exact distance here, it's about 1,190 points that we've traveled in the last 45 days. These red lines that you see are the unfilled gaps that we have left. And it's significant here that we've gone from traditionals to extensions of extensions to extensions of extensions of extensions. And we hit targets, and then we broke an extension inside of the progression of measured moves last night. Now, what's significant about that is that we had this kind of domino effect of leading indicators and everything. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.